Hello and welcome back to Altcoin Buzz. It's me, Jimbo, back for another market update. In today's video, we're going to round up our Bitcoin technical analysis, see if we can work out whether or not it's about to validate a long-term falling wedge or if we're about to break the resistance and hit the moon mode. We're going to check out Cardano Bitcoin, which is showing a really interesting correlation between the RSI and the price. And to round up today's video, we've got something quite special. We're going to use this chart from the 1929 market drop, which led to the Great Depression, to determine whether or not the bottom's in for the stock markets and specifically the Dow Jones Index, or if we're about to see a very red close to the week. Make sure you stick around to check that out at the end. It's going to be important for all financial markets. If you like the content we make here on Altcoin Buzz, please slap a like on the video. It helps us get the content to more people. And if you want a chance to win that CryptoTag Zeus starter kit, all you need to do is be subscribed to the channel if you're not already. Leave a comment down below and you'll be entered into the draw, and we'll announce the winner on Saturday. So we'll start right here on the weekly chart as we normally do, and as today's Monday, we're seeing a new weekly candle forming, and it's looking pretty nice at the moment. If we zoom in a little bit, we can see that we have gone on and already tested last week's highs. We're right there at the moment, looking to see if we can make a break through that 7,300 resistance, which has been heavy resistance for us over the last few weeks, so it's going to be really interesting to see if we get through. My perspective on this particular chart hasn't changed. If we can break that 7,300, then we go on to challenge the all-important purple trend line, get back into there, and we're very bullish back on this chart. See any clear rejection off this weekly chart, and we go back down to test the 6,500 support, if not our long-term support line. The volume is still clearly declining on the weekly chart, which is one of the things that makes this pattern look relatively weak. Even though it's nice to see such a big percentage bounce, the volume is declining on each candle, so it's really important to be aware of that. I want to quickly jump over to this perspective here for Bitcoin. This is the Bitcoin daily chart, and slightly different chart perspective. Now, what I want to look at here is we've got two potential wedges forming, and it'd be key to see if these play out, because what we could potentially have here is one rising wedge here, a smaller pattern. Now, if we were to break this to the downside and can be rejected from this resistance line, I think that may be a beginning point to start saying that we might also be seeing a larger long-term falling wedge form. But it's going to be really key. We're approaching this resistance line very quickly, as you can see. That's going to need another couple $100 to get above it, so it's going to coincide with our break of 7.3 and that purple long-term trend line. So it's a different perspective view of the same chart. But if we get rejected here, then perhaps we might be seeing a forming falling wedge here on the longer term frame. You can see these outside white lines. We'll have a look at the 4-hour and see if there's any clue there as to which way we're going to break out of this pattern. There you go. You can see that we've still got our two potential wedges. We're just a little bit more zoomed in regarding time frame. And as you can see on our 4-hour candles here, we've got a couple of things that I want to make you aware of. Obviously, you can see that we're getting relatively small volume here on this most recent break up off the 20 exponential moving average. As you can see, we haven't seen the candle go and test this resistance line completely, but we've got quite close, and with 2 hours left of this 4-hour candle, we're forming a doji at the moment, but we're going to have to wait and see where that closes. Certainly, this candle close is going to be probably quite important in determining whether we break through this resistance or come back down and test. Of course, if we take out the candle open and see this go red, then obviously we'll be looking at a local top perhaps. But if we can close well beyond where we are right now and see this really form as a green bullish candle rather than a bit more of a doji, then that's going to really be suggesting that we're going to break this resistance line. And if we do get that strong green close, that's probably going to see us break this resistance on the RSI. You can see this is still the 4-hour chart. Here's our previous high on the RSI. We're going and approaching that at the moment. So again, two key lines to watch here is the resistance formed from this previous peak and this support line that we've got developing on the RSI as well. And if we are to see a red candle, I imagine that a test of this support line and the price is going to coincide pretty nicely with the test of this RSI trend line as well. So definitely worth keeping an eye on that. Remember guys, I'm not a financial advisor, nor am I giving you financial advice. This is just me, a dude on YouTube, calling the charts as I see them and sharing my ideas with you. Next, I'd like to turn your attention to the Cardano Bitcoin one-day chart, and I've got two boxes here highlighted, and what I'm showing you here with these two zones is areas where we broke the 50 level on the RSI on the daily chart and where our price peak was subsequently. So here we crossed the 50 RSI on the 5th of November, and we saw a price peak of 21.57% higher on the 29th of November before subsequently coming back down. And here, once again, we've crossed the 50 level on the RSI on the 14th of January, and we saw a subsequent price peak on the 13th of February, 47.43% higher than when it crossed. The reason I wanted to highlight that is because we are currently testing our 50 level on the RSI once again. You can see right now we're battling it. Will history repeat itself? And is there anything else here that can help show us if or when this is going to break out? Well, there are. I'm going to show you that. When we broke the 50 level, we can see we had this battle with our exponential moving average ribbon, and once we finally broke out, that's when we started to see these gains really start to build up. And once again here, we crossed the 50 level on the RSI below the exponential moving average ribbon, but once we finally broke up and through it, that's when our gains really started to pile on. Well, right now, not only are we testing that 50, but we have broken into the exponential moving average ribbon. Nothing has been confirmed just yet. We are seeing a slight rise in volume, but nothing significant just yet. If we can get a close above this 50 exponential moving average here on the daily, and that coincides with the break of the 50 RSI level, I think this is going to start to look like quite a bullish chart. Certainly something to keep an eye on. During the intro, I alluded to the fact that we could be in for a very rough ride in terms of the stock market later on this week, and I'm going to show you why. Here we are on the Dow Jones Index current chart. We can see this is the daily chart. What I've mapped out for us here is our drop as so far. We've got a 23 trading day drop of 37.9%, and I know it says 33 days here, but that's because it's factoring in weekends. There are 23 trading day candles within this pattern, and that's a drop of 37.9%. And I just want to also bring your attention to this pattern that we have in the drop, which is that we've dropped down, we've seen a slight recovery, and then we've dropped all the way down to the bottom. Next up, you can see that we have a green box drawn, and this pattern here has seen us recover 23 odd percent, and I've got this box drawn out to 12 trading bars, and I'll show you why in a second. We're not there yet on the 12th day. This is the 6th of April. Our 12th day won't be until the 8th of April. Towards the end of this week is when I expect this to heat up, and I'll show you why. I'm going to quickly throw us a long way back in time to 1929, and this was the beginning of the Great Depression, and this was the market drop which triggered the Great Depression. And what I've got mapped out here is the local top in which we dropped for this Great Depression drop. And as you can see here, we had a 23-day trading pattern that we can see drawn out where we had a drop and a bounce and another peak, and then came all the way down to the bottom, very similarly as we have just done in the chart we looked at for the current time frame. And then as you can see, we then traded sideways for 12 bars. Pretty much had, we went up, we set a new high, 10% higher, not as high as we've currently jumped on in 2020, but it has, as you can see, it jumped up and it put 10% profits back on before dropping down. But the reason that we're really focused on this chart right now is what happened after those 12 trading days. And let me just drag the chart over and I can show you exactly what happened. We subsequently dropped a further 38.9% after those 12 days, 12 trading days of pretty much sideways action in a 10% range. We then dropped completely off again, and that's when we set our low for the Great Depression, quite a lot longer further forward. 14 trading days after we broke this 12-day pattern, we saw our actual bottom form during the Great Depression. So what I'm looking at here is the comparisons between these two sections of charts. We've got, let's zoom in, get rid of that. We've got this area here. And now, does this not look just very familiar to this area here? I know that we've seen a stronger bounce, but look here, we're testing the bottom of the 20 exponential moving average and seeing fierce resistance. Once again, we look back at 1929 and we broke just above the exponential moving average band, but never had a really strong close above it, and the subsequent rejection was what led to our final break off. And the reason I've got these boxes highlighted the way I have is because we did have this low here, so you can see that we quickly dropped below it but closed back above the support area. But it was once we did break it and we had a confirmed close outside that we really started to see it drop down much faster. Here's my question to you. Let me know in the comments box. Have we seen this entire drop play out? Have we seen this entire drop play out? Have we already seen the bottom? Could we be about to see the pattern repeat which led to the Great Depression of the 30s? It'd be really interesting to see. We will have a little catch up later on in the week to see how this is playing out, see if we manage to break above this exponential moving average ribbon. That's going to be a first sign that this is looking a bit stronger than it did back then, but at the moment it's looking very similar. The last thing I wanted to highlight here is this test of the 50 on the RSI. Look here, we dropped back through it. There's our big drop. Once we came back up and tested it, that's once we set our price high, and it was rejection from that 50 RSI level that then subsequently led to our bigger drop off. And as you can see here on a current in 2020 and our current drop, we are just on our way up to testing the 50 RSI level here. It'll be really interesting to see if we break that 50 RSI level this week. If we do, I imagine it will really pump strong and rally strong. But the inverse is also true. If we get rejected like we did back in 1929, then it could be the leading signal that worse is yet to come for the stock markets. I'd love to let know what you guys think of that down below. Let me know, do you think it's a correlation from nothing? Do you think it's nonsense? Or do you think there's something in the charts here that could be telling us a story of red days to come on the stock market? I hope you've enjoyed the video today, and if you have enjoyed the content, please remember to slap a like on the video. That helps us get the content to more people. And if you want a chance to win that Crypto Tag Zoo starter kit, we do a weekly giveaway. The announcement will be made on Saturday. All you have to do is be subscribed to the channel and leave a comment down below, and you'll be entered into the draw. That's going to wrap up the video from me today, guys. Take care. Bye.